want to talk about overlap. And what is overlap? Overlap is where you own some of the same underlying investments in different diversified investments, whether it's a mutual fund, an exchange traded fund, or you may even own the stock, not realizing that that stock is already represented in some of the other investments that you own. So that's overlap. And for today's example, we're going to talk about the S&P 500, the Dow Jones, and the Nasdaq. Those are three different indexes, and those indexes have overlap. And it's more than you would think. So first, the Dow Jones. Again, the Dow Jones is 30 companies. All 30 companies of the Dow Jones are in the S&P 500 index. That S&P 500 index, often referred to as the market, has 500 companies in it. Now you have the Nasdaq, often referred to as the Nasdaq 100 because 100 stocks in the Nasdaq 100. Here's what's interesting about the Nasdaq. 79 of the stocks of the Nasdaq are represented in the S&P 500. The Nasdaq has 21 stocks that are outside both the Dow Jones and the S&P 500. And then ironically, there are only 6 stocks that are represented in all 3 of the S&P 500, the Dow Jones, and the Nasdaq. In total, there are 521 stocks represented in those 3 indices. Those individual indices have a lot more in common than I think people realize. They have a lot more overlap than people realize. It doesn't necessarily help your overall performance to have all 3. Having unnecessary overlap can cause you to have concentrated risk. It can cause you to have higher costs by having more investments that own the same thing than owning one. And overlap is one of the things as an advisor, our job is trying to help you, the client, realize what do you really own and how is it helping you?